Hello and welcome to Pro Trader Strategies market commentary for Thursday, June the 4th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic, the geopolitical environments, and how that impacts the overall markets. Well, I do the same thing in these daily market commentaries, but I layer on top of it option strategies and trading strategies that I find based on that economic geopolitical environment and how it impacts the overall market with my market analysis. It's up to you, though, to know your own risk parameters and implement strategies in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get on with the economic data and see how that's impacting the overall markets and maybe do some market analysis on top of that. And then we'll talk about my trades that I've done, whether win, lose, or draw, how they're doing. All right, across the pond in Great Britain, we got construction spending PMI, or construction PMI, Purchasing Managers Index, came in a little bit lower than expected at 28.9, expected to be 29.5. Not really going to impact the overall market, though, based on it not being that major of an economic data point for Great Britain. Remember, we look at the flash numbers for that. All right, here in the United States, we got the preliminary jobless claims, unemployment claims. Remember, tomorrow is non-farm payroll. That's our big number of the month. It comes out the first Friday of the month. So that's really what we're going to be looking forward to. But this does give us a bit of insight into that, and it's coming in at 1,877,000, expected to be 1,820,000, so a little bit higher than what was expected there. We did yesterday, though. Let's talk about a couple of economic data points from Wednesday. Since I missed yesterday, sorry you guys, it was my wife's birthday, so I had to do a couple of things like go out and shop for her birthday. So got that out of the way. But we did get ADP non-farm employment change, and that came in at 2,760,000. Now, or negative 200 or 2,760,000. It was expected to be negative 9 million. So much better than expected there. So we're probably going to look at that economic data point a little bit more than what we're getting out today in the unemployment claims, because these unemployment claims have been all over the place based on the availability of that data, and it seems to be a little bit wanky. One thing we also did get yesterday, and I didn't have the opportunity to talk about, was that we came in with the ISM non-manufacturing PMI, Purchasing Managers Index. ISM is the Institute for Supply Management, our most important economic data point for the service sector, which is non-farm payroll, right? So it came in at 45.4, expected to be 44. Now, it was slightly better than expected, but the thing is we are ratcheting up closer and closer to that 50 mark. Now remember, 50 is the line in the sand. As above water is 50, meaning expansion in the economy. Below 50 is contraction, but we are consistently seeing better economic data points, and being the service sector economy that we are, that is good for the overall economy. Another thing that we got was the crude oil inventories yesterday, and that came in at a drawdown of 2.1 million barrels. So that was expected to be a build of 3 million barrels, much bigger drawdown than what was expected there. Missed by 5 million barrels. We're seeing crude oil move higher today, or actually a little bit off today, but we did see the move higher yesterday on that data point. Actually, right off the bat, we started selling off, which just didn't really make a whole lot of sense, seeing as much demand as there was for crude oil. But late in the day, we started seeing some weakness there as well. We did get a rally, and then towards the close, it just kind of fell on its face. All right, so today, economic data points. We talked about the unemployment claims. Tomorrow is the big one, and we have natural gas storages coming in at 102 billion cubic feet, expected to be 110 billion cubic feet, so a bit more of a drawdown there, showing some more demand for natural gas there. All right, so let's talk about the overall markets. We've got crude oil, like we talked about, slightly off on the day. Now, it does look like we are trying to hold on to these 30s. I don't know if we're going to be able to cover that gap. You know, this is a bit of a pause here, and there's really no confirmation at this point. It doesn't seem like there's a whole lot of oomph to this market on the upside to make that gap cover. But that is looking like what the market wants to do, is to migrate to cover that gap. I don't have any play on this at this point. I do expect us to see a little bit more weakness in crude oil. I don't think we're going to see a ton of demand, but we should start seeing some more ratcheting up there. You know, there's a lot of jubilation in the market right now because Las Vegas opened up last night at 12:01, or this morning at 12:01 a.m. So a lot of people are expecting this travel and leisure, which has been the big dragger, to start catching up. So I'm looking at a couple of things that I can start adding to that travel and leisure. You know, if you've been watching these daily market commentaries, I've been talking about staying away from that travel and leisure just because I don't know that everybody is ready to get out there and, get into a hotel or get into a tight, cramped space. But we are starting to see those open up, and bookings in Las Vegas were well over and above what was expected. So it seems like people having that cabin fever are ready to get out and about. So that could really start driving things like crude oil. One of the biggest visitors to Vegas are people who are driving, and that will be consumption there. Not that that is the biggest mover of crude oil. We know the manufacturer is the biggest user of that resource. So, but the fact of the matter is they start seeing people getting out and about and driving their cars and doing those kind of things. Manufacturing is going to start ramping back up again as well. And one of the hardest hit areas is Las Vegas for unemployment, and that will be a good thing. I think their unemployment is over 30% there. So bonds are coming off. You know, I wish I would have covered some of my TLT yesterday, but I wasn't trading. I was out shopping for a birthday gift for my wife, and it looks like that birthday gift cost me a little bit more than I was expecting with my loss on TLT, which we'll talk about here in a little bit. But it broke below my area. You know, I expected it to stay above the value area and want to build out this point of control, or volume node, and maybe even create a point of control up here. At this point, we're off a point on the day, and it broke below my support area, so I decided to pull the ripcord on that today. If we start getting a move back, I expected a little bit more support there. Like I said, if we start seeing a move back into that value area, I might put that trade back on. But at this point, I'm not going to. All right, the VIX is off by about 40 cents, or 0.4. It is out of those 30s. I don't know if we're going to see those 30s anytime soon, unless with all of this demonstration that's been going on, right? I mean, we aren't social distancing with these demonstrations going on. I'm not out demonstrating necessarily, but what I'm saying is with the demonstration going on, we as a whole are not social distancing, and we might see spikes in coronavirus. So this is actually going to be a litmus test for that, as a matter of fact. All right. Dow Jones is up 18 points on the day. We basically have a mixed bag at any given time. When I started this daily market commentary, the Dow Jones was actually in negative territory, but we are pushing higher there. NASDAQ pushing to where we saw a newer high again today, intraday newer high. We're off those highs right now and actually approaching the lows of the day. But the fact of the matter is there is some people that are looking to cover some of that tech. Like we've talked about, this sector rotation, where is it going? We've seen these NASDAQ stocks really go through the roof and make 52-week highs. And in some cases, we're seeing historical highs in some of these underlyings, right? I mean, EA Sports is one of those. Electronic Arts is one of those. And I think what we're starting to see is some people wanting to cover some of those trades that they've done very well on and move into these stocks that have been real laggers, like the airlines. Boeing had a big move today as well, and we're seeing Disney start to move higher. So a lot of these companies in Las Vegas, casinos, are starting to make those big moves higher with this opening up. And so there's a bit of a sector rotation, I think, out of tech and into that travel and leisure, which have been a bit of a lagger. So I'm not saying it's necessarily the right time to do it, but there is opportunity abound still in those areas that we can talk about here in a little bit too as well. All right, the E-mini S&Ps are off on the day. They were, again, obviously in positive territory off the bat, but we have started to see some weakness throughout the day. And here is what I'm talking about. Overnight weakness, which was a bit surprising, especially with Las Vegas opening up at 12:01 a.m. today. Well, today, a lot of that talk started coming out and people started hearing that there was a lot of bookings at these different resorts. So people were taking advantage of that heading into the weekend, and we started seeing, I think, a little bit more move to the upside. Plus, we got some pretty decent economic data the past couple of days, and that's been digested. But now we're seeing some profit taking going on. I mean, really just a sell-off. Nothing newsworthy to really sell that off, but we just did see some profit taking. There's a lot of risk at these levels with the markets or the economy starting to open back up, these lockdowns starting to get lifted on the coronavirus. Now, of course, we do have a lot of other headwinds in the form of the states and stuff like that putting on curfews that could crimp, like the bars and things like that need to stay open past those curfews to make money. But E-mini S&P is actually trying to make a move right now as we're speaking, getting a little bit better as each tick goes by. But let's talk about the trades that I've done. Well, I haven't done anything in Las Vegas Sands, actually. Southwest Airlines. I did get filled. I must have gotten filled right before this move. I was having a working order in there in the July. In the July, I sold the 32.5 puts in there. And I did that for a collection of $1.25. Now, have I gotten in a little bit late? Maybe. We could see a little bit of pullback. I did look at the 30 puts in there. I just wasn't being able to collect very much money. And I figured I'd actually like to add some of this airline to my overall portfolio, my trading portfolio. Now, over there in my IRA, I have on American Airlines, which is actually almost back to even today. As we're looking here with the American Airlines trade, I got in right around this. I got in at 14.98, in and around there. I think it was actually 14.98. So 14.98 in there. So almost back to even on that. But this is what I'm talking about with that travel and leisure. A lot of people are starting to loosen up and looking to want to travel. Most of this, like the airlines and Boeing and stuff like that, are making that move based on what we're hearing going on over there in Las Vegas and the expectation that people might start jumping on an airplane relatively soon. So American Airlines making a nice move, but in that LUV, Southwest Airlines, I did throw on some puts in there and would add that into my overall portfolio if we started getting a bit of a pullback. I'm ready to start getting back into some of that travel and leisure there. Disney is also another one that's making a move higher today. And, they've already opened up, but they are starting to make a move higher here as well, as it seems like with Vegas opening up, other places feel like they will or traders or investors are starting to feel like they will do it a little bit better as well. The other trade that I have to talk about here is TLT, and like I said, it broke below my support area. I expected us to want to stay within a bit more of a tighter range there, build out a volume node, and it kind of broke through that yesterday. Like I said, I wasn't around to trade it, so I didn't get involved in it, but we can see here I was expecting us to stay within about that area there. It's a little bit high, but I was expecting us to kind of stay in there and then build out some of this volume in and around it here. When we broke through that yesterday, like I said, I wasn't really watching this diligently as I was out running around trying to get some shopping done. So I didn't pull the ripcord on that. Today, that move lower, I'm done with it. So those happened in the June, which expire in like 15 days. And yes, the probabilities are still in my favor, but the fact of the matter is I didn't want to ride it when it broke below my support level that I've been talking so much about. That's the time to really cover that, not necessarily when I get tested on my strike. And I had done the June, sold the 157 puts in there for 64 cents. I bought them back for $1.85. So lost money on that trade, but happy to pull it before I got put that stock there, or had to buy it at 157. Yeah, we're still a full point away from that, and we could see a rebound tomorrow. But like I said, I'm going to wait for that move back higher in order to do something like that. The long end of this curve in the interest rates is starting to move down, which the interest rates meaning that's moving higher, despite the fact that we're still seeing really low interest rates here in the near term. All right, and then finally, the other one that I was talking about, PENN. This is what I'm with the overall markets and the gambling institutions, not necessarily the brick and mortars even, but the gamblers. We can see we're only about $2 away from a historical high in PENN. And that's after it went down to $3.75, you guys. I mean, it was literally a penny stock. That's where anything that goes below $5, these funds have to unload these things under $5. And that was capitulation moment in PENN. So doing very well in that. I haven't covered that yet. I think PENN is going to do very well, especially with their acquisition of 30% in Barstool Sports. Those guys create great content, and I think will help drive more people to know or create PENN as a household name as well. So still in PENN, but wanted to talk about some more about the travel and leisure. I got a little ahead of myself on that, but all things being good, I covered, like I said, that TLT trade and added some some Southwest Airlines. I was looking at Las Vegas Sands, but I basically have PENN in there doing very well, and some of the other ones have great strike location on this, and some of the other ones have already started making that move. And that's about all I got for you guys, other than we do need to talk about our disclaimer and keep in mind that we are an educational company. Please take a moment to go over this. Today we are doing a new course, and this is the roadmap to building options or to trading options. I'm going to talk about how we go about implementing options into our portfolio. We talked about implementation of options into our portfolio, but this is a bit of a twist on it. So check it out. Go to protraderstrategies.com and sign up for that, as it is a brand new course, especially if you kind of got into the middle of the other one. We are going to be building this out as we go along as well. All right, so that's all I got for you guys, other than if you can't take that, take it easy.